Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be your daily cryptocurrency market update on this wonderful Tuesday. I don't even know where to begin, guys. There is so much going on. You guys know that we've been able to direct or give you the direction of the cryptocurrency market since 44K. Really because we've looked and we've done cross-market analysis. You know, we're dancing to the same beat as the stock market, even to the likes of gold. You know, there's this liquidity crunch really taking place. We're going to be talking about that a little bit, but we stress it on most videos. In this one, we're really going to be talking about the fact that Bitcoin is quite literally on a cliff's edge right now, ladies and gentlemen. It is make or break, and it's our opinion that it is going to break. We are going to see further capitulation for Bitcoin. I did a long video, I think it was around about 22 minutes long video, looking at the 4-year cycle theory. Is there any relevance to it now? The answer, I believe, is yes. I think the halving is going to have an effect on Bitcoin's price. To what degree, we're yet to find out. But we actually looked at the fact that I believe what you're doing here is very, very similar to what you did back in 2018 before we had that spill all the way down to 3K from around about 7, 8K. Everybody was calling for the bottom here, and then we had an absolute spiller. I think you're in for a similar time today with this structure that we're forming. In fact, I would be very, very surprised if, you know, Bitcoin actually comes back up and hits 22K at this point. I think with everything looming, I think we're already seeing people really take more risk off the table going into the CPI. I think it's very likely that Bitcoin is, and the next leg for Bitcoin is very imminent. We've spoken about this sort of head and shoulders pattern. It is valid, and you could definitely argue that there is a head and shoulders here, but we still, whether it is here or not, do believe that Bitcoin is not only coming to 14K, but actually going to run it and go sub. We've got 13,800 as a target, and I can definitely see that getting fulfilled. What is that going to do to the altcoin market? You have to watch Bitcoin to determine what your altcoins are going to do, and I believe altcoins are going to get absolutely smashed. And the argument that people like to make against that is, well, you know, who's really going to be selling altcoins here? The people that need to make their bills. It is a horrific, and I know it's becoming a bit of a meme now, but we've been talking about the macro for a long time. It is a horrific macro environment that we are in, and it is set to get a damn sight worse. We have, again, the UK coming out and upping their commitment to the bond market because they have no other option but to support a failing debt system that all central banks right now, guys, are screwed. They have to choose between completely destroying their currency or a systemic failure, systemic financial failure. I think probably both are going to happen. I think you're going to have the systemic financial failure. I think this is what the yield curve essentially is predicting, a debt failure. And then you're going to have huge proliferation, and we're already seeing it in emerging nations and now actually in some larger nations like Europe and the UK. You're then going to have huge proliferation of the financial systems, and that's potentially when we flip bullish again. But it is a really, really bad macro situation. This is from today. This came out about an hour ago. Bank of England intervenes in bond market again, warns of material risk to UK financial stability. The Bank of England said dysfunctional in the index-linked gilt market and the prospect of self-reinforcing fire sale dynamics posed a material risk to the UK financial stability. The move marks the second expansion of the Bank of England's extraordinary rescue package in as many days, after it increased the limit for its daily gilt purchase on Monday ahead of planned end of purchase scheme on Friday. So they're essentially, you know, the Bank of England today announced an expansion of its emergency bond buying operation as it looks to restore order to the country's chaotic bond market. The central bank said it would widen its purchasing of UK government bonds, known as gilts, to include index-linked gilts. So they have no other option but to prop this failing, dying market up that has been in a bull market for 40 years. And March 2020 is one of the most significant pivotal financial events, even though it wasn't on the face of it supposed to be financial, that has ever happened in our lifetime. And it's actually led to a death spiral, a fiat currency death spiral that we are witnessing today, ladies and gentlemen. This is the gilt market that they're talking about. This is where the Bank of England stepped in. This is what happened. They then sort of said, oh, okay, well, maybe we don't need to step in now because it's kind of sorted itself out. And then since then, they've kind of had to renege again and go, no, we are actually going to step in. And this is the spill that you've had. So it's kind of proven, even though they're stepping in and sort of, now saying that they're going to continue to buy and they're actually going to buy more aggressively, this is the response. We're back before any announcement had even been made. It shows a real lack of confidence in the system. We have just absolute insanity taking place. The rise in interest rates is going to suck liquidity out of everything because it has to inherently, because you need more money, you need more fiat, you need more dollars, pounds, euros, wherever they're upping interest rates to service that debt, which nobody even wants anymore. So we're seeing huge deleveraging in these markets. And this all affects Bitcoin. You know, we know what the dollar is doing. The dollar's actually continued to be very, very strong during this time period. And do we get some sort of a double peak? Maybe, and then we have a little bit of a rest. Gold is down today. The UK markets are down. The futures for the stock market is down. It's looking like it's going to be a red day. Bitcoin is still being somewhat resistant. From a purely technical point of view, you don't want to short support. Okay? So that's kind of one reason why this hasn't rolled already. And please go and watch my yesterday's video, guys. We looked at the fact that, this level has to be kind of respected because it was 2017's high. You also had, and there was kind of this pause period before we really saw that parabola move. Round about 18K before we really saw that run all the way up to 64K. So there's key support here, and people won't want to short that. The problem that you've got is once this fails, just like once this support failed here, and this support failed here, and the one prior up here failed, it's a spiller coming your way, ladies and gentlemen, and it's going to have contagion. It's going to cause, stops getting hit. It's going to cause huge contagion across the board, and we're going to see real capitulation. I'm not saying this because I want to be bearish on crypto. At the end of the day, guys, if this was the bottom, we've already doubled our Bitcoin portfolio. We only got out at 44K. We've more than doubled. We would have tripled, quadrupled, in some cases on small altcoins, 10x'd our altcoin holdings if we bought in today. So we're winning either way. And many of you guys should be as well that follow this channel daily. The problem that I've got is I genuinely don't believe that this is the bottom. And I think there's a lot more capitulation to come, ladies and gentlemen. And I think that has everything to do with the fact that people are going to be financially screwed with what's going on. And they're going to be... people aren't selling because they necessarily want to. They're really selling. Most people aren't traders. They don't know. They're not market technicians. So they're not selling because they see it as a now's a good time to sell. They're selling almost because they have to, and this gets worse and causes huge contagion. Again, with FOMC tomorrow and the CPI coming out Thursday, you're already seeing de-risking going into it. In my opinion, a bad print or even a print that's as on estimate is going to be extremely detrimental, guys, and is going to see further capitulation and continuation to the downside, and actually could be the triggering event, in my opinion. Please go and watch yesterday's video. It's well worth watching. It's 20 minutes, but you're going to get more from that video than probably, 10, if not hundreds of hours of listening to other people talk about the cryptocurrency market, because there's a difference between me and many of those guys. This is how I make my living. I've lived through it. I've been in the crypto market for 5 years, and, I've studied it. I've got a good knowledge about it, and I honestly see that continuation is on the cards, and I do believe that this structure here is extremely reminiscent to what we did over here. In fact, do you know what? Let's just overlay them. Not that that means anything, to be quite honest with you. We did all this in yesterday's video, but I could certainly see something like this playing out. Maybe we have one more sort of spike, one more flush out of the early shorts, and then we get that capitulation. But this is what it looks like to me, guys. You're fizzling out. The reason Bitcoin, again, is staying at this level is just simply because it's a key technical level. It's not because it's bullish fundamentally or even technically. Just people won't want to short this. I also think that when every time you get a push up, the reason we're getting a slam down is because potentially big players are building up maybe long spot shorts, not leverage shorts. Leverage shorting is going to get you wrecked. Potentially, if we do get some sort of a wick, which I wouldn't put it past them to squeeze everybody out. Markets go towards pain, and they will search for liquidity. And there's a huge part of liquidity under here, guys, that in my opinion is going to get obliterated. You don't want to be on the wrong side of this. I'm not. If this offends you, what I'm saying, by the way, guys, maybe this channel isn't for you. You guys are only going to get real information here. You're doing this kind of a situation, and if you can't see it at this point, you should change your name to Stevie Wonder, because I don't know what to tell you. And the reason that we're talking in this manner and we're getting so, you know, passionate about this is because you need to be on the right side of this. You do not want to be holding. Maybe if your strategy is to be here in the next 10 years, right? Which is mine as well. But as the trader in me goes, okay, if I can double my holdings, which we've done, we're definitely going to do so. This is from Dillian the Clerk. This is the farewell cheap money. Refinancing costs for borrowers globally climb to records. Higher than 2008. Higher than the 2000s. Significantly. This is one of the most aggressive monetary tightening cycles we've seen since Volcker. And what does that impact? That impacts money, the flow of it. You know, this is since Bitcoin's history, it's just gone up, the money supply. We're now in a completely effed environment in terms of free money. You know, Barclays did a great write-up on the end of free money and the fact that, you know, money and the cost of it's now becoming expensive. And if money's expensive, it's less free flowing and you know, less likely to find its way into markets. You've got this kind of stream that is liquidity, and you've got these kind of diversions off it, and then you've got assets at the end. You've now got not only diversions from the stream that's heading towards assets, you've got from assets itself going back into the debt market. It is a bad system, and I honestly believe, and this was some comments from Dillian Leclerc, the world is sleepwalking into a massive debt crisis, and only FinTwit is talking about it. The average person doesn't have a clue. Yeah, we honestly think, by the way, you know, I always get this comment, oh, everybody's bearish. No, they're not. In fact, it's very polarized. A lot of YouTubers are still bullish. The people that told you that back in June it was the bottom, you know, they're wrong. Nothing wrong with being wrong as somebody who's a market speculator. You're going to be wrong. It's part and parcel. It's going to happen to you. You know, one thing that's damn sure as an investor and a trader is that you are going to lose money at some point. There's no getting around that. So it's okay to be wrong. The problem is, at this point, instead of admitting, just like we admitted when we sort of hit 44K for Bitcoin, okay, things aren't looking too good. Instead of admitting that they're wrong, they're now willing to die on that shit because their career's been built upon it. I honestly believe, I think on balance of probabilities, when you're looking at this, it is the probabilities are massively, massively, massively stacked in your favor that you see further downside. And really, what you're doing, if you're looking for longs and you're hoping that a bull market is now going to ensue, is you are hoping and praying. You're you know, it's not a very high probability that this is the bottom at all. Potentially, maybe this is a double bottom. I just don't think it is. I just think when you weigh up the full picture, which is most of these people have their blinkers on, it's a bad picture. And what Dillian Leclerc is talking about here is exactly what I believe this yield curve is essentially predicting. This yield curve has essentially predicted before March 2020. Finance is at the core of everything, guys, and why this channel exists, to help educate people about it and put them on the right side of it, because I've been on the wrong side of the financial system growing up. I know how badly it sucks. You know, this is really to put people on the right side of the financial system and help them benefit themselves and gain some freedom through it. This essentially yield curve that we had in 2019 had a lot to do with the repo market. We've spoken about this. Predicted the March 2020 capitulation, just like we had the financial prediction from the yield curve, just like we had the dot-com boom, and just like we had the crash of 1989. And yes, there has been periods of 2 years after a yield curve that it's took place, but the last one we had took 6 months. I'm going to argue that this one isn't going to take too long. Jamie Dimond, this is serious. JP Morgan, Jamie Dimond warns US likely to tip into recession in 6 to 9 months. Jamie Dimond spoke about this a while ago. In my opinion, we're already in a recession, and a bad one. Okay? you know, and it's going to get worse. This is the issue that I have. They're going to continue to up interest rates. We've seen the effect of them upping interest rates thus far. It's not been positive. That's set to continue. And conditions are going to get worse for the consumer. Whilst we still have... People forget about inflation. They're only focused on interest rate hikes right now. Inflation is almost just as detrimental because inflation affects people like me and you more than anybody. Most rich people have assets. The normal masses typically don't have assets. There was a study done by Lloyd Bank that essentially said over 50% of their customers don't even have 500 quid in the bank. Well, that 500 quid just lost 20% of its value. Or what they're saying is 10. I think it's significantly more. Go and weigh up the price. You know, everyone's going to buy oil, food, so on and so forth. So Jamie Dimon's coming out and saying this. Everybody's now... What's going to happen now is that narrative's going to switch, and we've been telling you for a while this is going to be the case, from soft landings on the cards to, no, we're screwed. And that's when the panic sets in, and that's when people become sort of forced sellers, unwillingly almost. So it's going to be a very interesting time. Also, we've got the European crypto regulations enter final phases. The European Parliament Econ Committee confirms MICA deal, setting up the regulations to enter force in 2024. Right about the Bitcoin halvening. So maybe, you know, spoke about the Bitcoin halvening yesterday. Please go and watch that video if you haven't already. It's going to be interesting. I think regulations could prove a massive threat to crypto and its sort of stability. But it's very ironic. They could also be the very gateway to further adoption, certainly institutional, when we see kind of emerge from TradFi into the crypto space. It is coming, in my opinion. But it's very ironic that crypto is supposed to be permissionless and you know, your government is telling you, you need our permission to use it in the name of safety. And this is how they kind of get you. That is all I've got for you in this video, guys. It was long enough. These are a lot longer videos just because I'm really trying to emphasize what's going on here. Again, doesn't mean that we don't have a push here. I'm not calling for this to just break instantly and slam. Maybe you get some sort of push to the upside. Maybe you get a flush out of those longs or shorts, sorry. That is very likely. Market and market makers love to wreck people. It's what they do. But in my opinion, it's a matter of time before this rolls and we see that further downside. And I want every single one of you to be on the right side of that move when it comes. That is all I've got for you in this video, guys. If you've enjoyed the content, like us, always appreciate it as a comment. And look forward to seeing each and every one of you in the next YouTube video. Thanks a lot for watching, ladies and gents.